Warren Buffett is one of the most well-known investors, and he's one of the most experienced, and whenever he does anything in the world of finance, everyone pays attention. So I recently found this article discussing Warren Buffett and what he's doing with his money, and I want to share it with you guys. So the title was, Warren Buffett Gets Gloomy, America's Incredible Period is Coming to an End. Here's what nervous investors can do right now. So it's talking about how, according to the world's most famous investor, Warren Buffett, the incredible period for the US economy has been coming to an end in recent months. And even his own company, Berkshire Hathaway, isn't immune. Talks about, this is a quote from Warren Buffett, "The majority of our businesses will report lower earnings this year than last year," Buffett cautioned at Berkshire's annual meeting on Saturday. This is largely these contributing factors that are persistent high inflation, higher interest rates, and ongoing banking crisis, and all these things have made Buffett much more concerned about investment gains in the years ahead. His partner Charlie Munger also echoes his sentiment, "Get used to making less," he said. The article goes on to say that the duo's pessimism about the economy was also reflected in the company's investment portfolio. Namely, their cash position increased and they sold a lot of stock. So these are the numbers from the article. Berkshire Hathaway was a net seller of equities in the first quarter of 2023. Net seller meaning they sold more than they bought. And they pocketed $10.4 billion in stock sales after deducting purchases, and the company's cash hoard expanded from $128.6 billion at the end of last year to roughly $130.6 billion after this first quarter. So some other things that this article talks about was different ways that we can potentially benefit ourselves as investors during times when the US economy is not doing as great, and as in this case, says that America's incredible period is coming to an end. As you all know by now, or at least many of you know, the big boom cycle of the most recent bull market has been crazy and long. It has been expected to end for quite some time. The last real deep correction was around 2008, and then that really got corrected up came back into a bull market around 2011, 2012, and it's just been going until 2020, where we hit a blip from the pandemic. And then finally in 2021, we hit about the peak, and we've been kind of dropping and bobbing around since then. So I would say that the most recent bull market was generally between 2012 and 2022, which is a 10-ish year period. And that's pretty long as far as typical lengths for bull markets and not having any major corrections goes. So as far as international stocks, this is a little snippet from the article saying, the odds of a US recession in 2023 are high as 65%. The risk is also high in other developed markets such as Britain, France, New Zealand, and Canada. This is something that I thought was interesting though. It said, but developing markets are far less vulnerable to a recession. In fact, that same survey suggests India's odds of a recession is 0%. So that makes me want to dig a little more into India and better understanding what's going on in their economy. And while as investors we don't necessarily want to focus too much on macroeconomics, we need to focus more on individual companies. But as India is this growing as India is this growing nation, and they have really been developing and expanding over the past years, and their economy has been booming, it would be really great if we could find some flourishing companies in this area. So currently, I haven't done a whole lot of digging in that area, and while I'm not so familiar with India's culture, it would be an interesting place to do some digging. So I'll just say that. Again, with the article stating that Berkshire has a cash hoard of $130 billion at the end of Q1, it also discusses how his favorite asset right now is US Treasury bills. And me, I also have a lot of US Treasury bills. That is a pretty good chunk of my portfolio. as I am also saving up to buy a home in the near future. As I am saving up to buy a home in the near future, and U.S. Treasury bills offer currently a pretty decent yield, around 5% annualized, and they are a safe investment as they are backed by the U.S. government, and that's where a pretty significant portion of cash is right now that is not living within my investment accounts. So the article was talking about how Berkshire boasts a cash hoard of 130 billion at the end of Q1, and it seems Buffett's favorite asset right now is U.S. Treasury bills. It says the Oracle significantly boosted his treasury and cash equivalent holdings during the quarter. So again, just kind of wrapping things up. I am still investing in stocks, however, a lot of my money is in treasuries. And again, this is due to the fact that it's a safe yield, pretty much guaranteed yield, and I am looking to buy a home in the near future, so that's where I have a lot of cash sitting right now. Yeah, keeping money in treasuries. I'm guaranteed a safe return on investment and it's backed by the US government, and I'm earning a solid return. Another option and another place I keep money that is not invested in the stock market is also high yield savings accounts. So previously I held savings in my Wells Fargo account, and in that savings account, for those of you that know, you earn basically nothing. It's a fraction of a percentage as far as your interest on savings held with the bank. So I found a different bank, and what I currently use is Alliant Credit Union, and I'm earning over 3% for just having money sit in the savings account. And as you build up more and more cash in those accounts, you can earn $100+ a month for just leaving it there. And obviously, you build it up more and more, you can earn much more money from interest. So that's what I'm doing right now, and just want to share a little bit with you guys on that article I found from Buffett, not from Buffett, but the article about Buffett and what he's doing with his money and different options for us as investors during times when America and the United States is coming down from a boom and not doing as great economically. Anyway, thanks guys. Let me know if you want anything covered in future videos, and I would love to address any comments, questions, and concerns you guys have. Thanks.